Option chain analysis. What does it tell us? Where do we find it? How do we get the extra benefit from the option chain to add to our technical analysis and improve our trade and to help us make more money? What is it that the option chain tells us that we won't find anywhere else? And what is TradeSpot going to chip in with little bits of extra details and magic that you don't find anywhere else? Well, here we go on a quick, simple, concise, one-take video on how to analyze the option chain. If you're looking for a more in-depth and considered video, check out the Patreon. It'll be linked below in the description with anything that I happen to click on now. For example, the nasdaq.com/market activity website, where you go to find your ticker for your option chain. Down here, you click on this level option chain, this menu here, and if you don't already load up the option chain when you first search the ticker, it will come when you tap that button. Here you have August 19th, 2020. That's the expiry, and you've got these listed all the way down. Why are they listed down here? Because you've got consecutively increasing strike prices for this expiry date, and they get higher and higher as you go down the list. That's why we call it a chain. On the left-hand side, you've got calls. On the right-hand side of that strike price, you have puts. So calls can be bought or sold, and puts can be bought or sold. Buying calls, selling puts, that's bullish. Selling calls, buying puts, that's bearish. And we can look and see the open interest for calls and puts on either side of the strike price here with regards to this expiry date at each of these strike prices. So we can see here that the highest open interest on the call side is here. Whoops, didn't mean to open the individual contract, but that's where it is, where you've got the highest open interest at the strike price of $40. And as such, we'd say that that's likely resistance. More on that later. On the right-hand side, you can see where we have puts with the highest open interest listed here at a strike price of $34. And that's where we consider support. Why would that be support? And when we look at the call side, we'd be talking about resistance. Well, if you want to know more about it, like I say, patreon.com/tradespot, and you get on the little course there. But that's what we would take from this chart, looking at the open interest. We could also look to the change in open interest, which would give us more information as to the support or resistance strength at those areas. And we could then measure this along with other expiry dates and the change in their open interest to get a picture of long-term trend. We can add those two support and resistance zones into our charts. If we go over to the charts, which would be here, and we look at the weekly expiry, then we can see that $35 was the area where we typically would expect to find support. That comes in approximately between where price action closed on Friday and where it's opening today on Monday, 33.60 at the minute. We can see that support then at $35. We're already below that currently outstanding open interest area, where we would expect then price action to potentially bounce back up to. Drop that in. That's horizontal level at 35. And the top side where we found typical expect resistance based on the open interest is in around $40. So that's one thing to look to when you're analyzing the chart. And for a quick addition to your own TA with looking at this week's option chain, there's a lot more you can take from an option chain. There's a lot of different ways of analyzing it, and there's a lot you can do with open interest. So one of those things I've got a video on, I'll try and link it up here in top corner somewhere. That's what I'd be pointing out in the first instance when you're looking at the option chain. I'd also say that there are other things to look to that just to briefly touch on them here. GME open interest, strike price 34.13. This needs to be updated, but it shows the max pain is currently at $37. That's where most people will lose the most money if the contracts expire. And so you're going to build that equilibrium into where you expect prices to arrive towards the end of the week, towards the expiry on those particular contracts. So if you want more information on open interest, more information on how to analyze the option chain, definitely check out the Patreon and the course I'm going to be putting on in the next wee while. But there's some top tips for you already. Thanks very much.